For your trend line to be valid, it must touch 2 to 3 or more points, be it swing highs or swing lows, for the trend line to be strong enough. What I mean by swing highs are those points like the lower highs here. Those high points, like those are the swing highs. And for the swing lows, we do this. These down here, those are the swing lows. 2 or more for the trend line to be strong enough. The market, meaning the market was bouncing around that region there. So if you look at this market structure and the overall trend, we can see it's bearish. Yeah, it's a bearish market structure with lower. This was a lower high compared to this other lower high there. This was lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and it's currently coming back to make, there's a lower low here with kind of a double bottom, but we are yet to see about that. But the general trend is a downtrend. It's bearish. Always trade with the trend because the trend is your friend. Okay, let's do this. Let's analyze from here. So basically we are looking for sales in this case. Yeah, I'll show you how to do that. First with some chart patterns, and first let's analyze this market. We're basically looking for sales, and if you look inside this long channel here, yeah, you can see something. You can see something. And you draw this one like this. And another one on the top like that. Let the trend line touch 2 to 3 or more points for the trend line to be strong enough. If you look at this, you see we have a flag, and it's a bearish flag, meaning it's supposed to break going down the way it did. Bearish flags always go down. Yeah, the way it just did. Bearish flags go down. And let's measure the first TP to see if it was reached or not. Measure the inside of the flag like that. Place it like this. You can see the TP has not yet been correctly reached. It's supposed to be here, somewhere here. It hasn't been correctly reached. So, and the first TP is usually 90 to 99% sure that it's usually hit. And being that we are looking for a bearish, we are looking for sales here, I'm sure it will come down here eventually. What we are currently seeing are just things being printed by the market to confuse newbies or new traders. But the general trend is bearish. As we can see here, the price broke this trend line and is now playing around this level here, making some like making a pattern here like a double bottom, like that. It's a W. we can all see it's a W, and it has not yet fully formed. Yeah, the leg of the W has not yet been fully formed. It's still in the process. And if you look, let me zoom, it's a W that has not yet finished forming. And this W, this is the leg of the first leg of the W. Here we call it the neckline. Here is the neckline. This middle point of the W came back with another bottom here, making a double bottom, forming the W, and it's currently at the neckline. Whenever the price reaches the neckline, yeah, it breaks the neckline, then comes back with a retest around this region, then goes up to finally finish forming the leg. And whenever the leg is finished forming, the price then comes down. So basically what I mean that might happen is this. Here we are at the neckline, and the price is currently sort of retesting, because if you look to the left, there's an area of confluence here, so the price cannot just pass without any difficulty. It must retest, then later on pass, coming back here, kind of making a retest to this trend line we drew here. It will come back to this region. So basically it will be something like this. It's currently at the neckline. It will break like this, then again retest to this around region, then finally come to test this supply zone here. Test this region of confluence. It's a supply zone. It will make a fake out. It will sort of make a fake out here to confuse new beginners or beginners that the trend is finally going up. Then after reaching this supply zone, it will go back. Yeah, there are two areas of confluences here. We will have the trend line and this supply zone. This trend line and supply zone, those are two areas of confluence that the price cannot easily pass. And you remember, the price hasn't fully reached the first TP, yeah, which it must come back here to reach this first TP. So my trade expectation is what I've just said. This double bottom will finish forming and come here to this supply zone, test this region to confuse newbies that the trend has broken the trend line and now is ready to go up, and it will even retest this trend line. And you people will think it's being manipulated. No, it's not being manipulated. It's just liquidity being swept, and depends on liquidity before the correct move to come. So the first TP is here. If you measure it, the first TP, and for the second TP, you do this. The first area of confluence there plus that length, and the second TP will be here. to that other lower trend line. The lower trend line here acts as the support, and the upper one here acts as the resistance. This one acts like the support, and this other one acts like resistance. So the price usually plays in between support and resistance. Yeah, even though it's moving in a zigzag pattern, but it's playing in between. Then, and if we go to a higher time frame, like maybe the W1, the weekly time frame, the price had broken this. Let me remove these ones. The price had broken lower trend and the lower usually a retest. So this one also confirms that the price is coming back to test this trend line before making the correct move to the lower side. So for this trade, for you to take this trade, you wait for confirmation around this region before going for sales. Yeah, wait for confirmation around this region before you sell. It's a swing trade. It's basically a swing trade. You just put your triggers around here and the stop loss a little above this wick here. And if you look at this candlestick, it's a hanging man, bearish hanging man, meaning the price, hanging man means the price wants to go down. The following candle after that, you can see it engulfed this other bullish candle. It engulfed it, meaning the bears are still in power, and this one is just like to hit your stop losses and sweep liquidity before the correct move to the downside. Yeah, let me go to lower time frame, like H4 here. We were in the daily. It's still printing candles here and there, here and there. H move. Let me go to M30. If you go to the lower time frame, you see the price is making a bullish market structure. Higher high, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher and low, and it will go back to this supply zone. Yeah, basically it's a sell, and it's a sell for a long time. It's a swing trade. A swing trade. And that's it for now. For more info, please put your questions in the comment section, and peace. Bye.